Good morning, everyone, and welcome to the European crossover webinar. And we're seeing equities still continue to go on and push higher even here. And it looked like we were starting to see a little bit of a turn. I actually took a couple of trades in Asia, and I'm glad I just didn't stick around. I was thinking, probably when I wake up, this thing's going to be even lower because it looked like we were starting to turn, you know, lower here. We made a couple of runs in Asia, and then we turned around and rolled right back over. Um, but you can see here we've now gone and pushed past that 31.25, which is really a key area here, or I think it's exactly 31.23. But we've made a couple of runs here in Asia. Quick dip, made it up towards that 31.23, then dip, another failed attempt, and dip for another low, even took out 3100 even, and then we marched up, and then we took another quick dip, and then I thought, well, I'm not going to sit in anything, but I wouldn't be surprised tomorrow or in the morning we're down here in the 3080s. Oh well, it is what it is, and get up and wow, look, we pushed beyond the 31.25. I mean, I'm really surprised. I'm glad I didn't stick around on my shorts and took them out. Not even for all that great of a profit, but every little bit helps. But like I said, once again, I'm surprised that we've made it up here. But nonetheless, key that we're above this area here, this 31.23, and not only that, but we've also even ended up generating a buy signal here. We see here, and we're just pretty close to finally edging to a sell signal. You see here, and now look, we avoided that. The two lines kissed, and we're back in a buy mode. And then on top of that, the 30-minute close above that, you got to go with the technicals. I mean, it opens the door for us to challenge even higher. You can see here, we've made it right here and kind of run into some difficulty at this 31.42. But really opens up the door for a challenge. And the only thing that would give it a sell right now is if we slip below 31.23 on a daily. And then, of course, if this rolls over, then we could probably go on and slide at that point. But, with everything that's going on, with the reignition of the virus and also some geopolitical issues between China and India, you would think that we would be, under some kind of a pressure. And I'm surprised that we're not. And we're pushing up and higher here. And it looked like the market was getting tired. We're seeing the same thing even in FX too. Down taking a look here. Seeing the Dow futures move up higher. My concentration actually has been all yesterday was just on the SPOOs where you can see the significance of this 31.23. And there's the 5 minute with the 2 hours. So this is the way I felt more comfortable yesterday trading this way, and it kept things more, at least for me, easily aligned. But you can see here in Asia, these dips up here to this key, and here we are at VWAP. I haven't updated that, but you can see here the moves up in here in Asia, dip. One more time, look at it, a nice little setup here. Quick, fast dip. Another one, we pierced 3100, come back up in here, and now we push now. Whether we run into a little bit of gas in here in this 31.42 is to be seen. But nonetheless, we are above this 31. And on a 5 minute, the key is 31.28. On the 30 minutes, 31.23 here. And you can see how important this was. Actually, yesterday I almost ended up getting stopped out. And I ended up hanging on them because I said, look, if we close, I'm not going to let this market run away. And fortunately, at the time, I'm not sure where it was exactly. I guess it was right in here. We didn't, and then we were able to make that dip lower. Because I said I'm not about to let this thing run away. If it closes above 31.23, hey, it's a buy on the 30-minute. At least a buy in the sense for me to go and get the heck out of Dodge. And but like I said, you can see, to me, the significance right now, as you see here, we have closed above 31.23 on the 30 minutes. So I have to respect the technicals. Not only did that we do that, look how this bar takes out all these areas here. You see, so and now we're in a buy mode here. So you got to go in and respect this. Hmm. So my concentration was more just to focus just on the SPOOs and disregard what everything else was doing, figuring that it would all play out in the numbers, and I would reference what the other markets are doing just kind of quickly. If the S&Ps were stuck in a certain area, take a look and see what Nasdaq and Dow was doing. But I kind of tried to keep my focus primarily just on just that one market, the SPOOs, and it was much easier to see if the market was instead of me jumping back and forth between charts just to see where's the significant levels on a 30-minute versus a 5-minute, and to trade it that way, and it seemed to keep things a little bit more orderly, for lack of a better phrase. But we'll go on and take a look at the news. Mark says, is that the same for the Dow? Yeah, we can go and take a look here at the Dow. Like I said, I wasn't. I mean, each market, the Dow and the S&P trade a little bit more closely. The Nasdaq, obviously, completely different type of market. Heavily technology based. I'm not gonna say it's all technology based, but heavily technology based. Marches to its own drummer. Apple was making new highs again yesterday, so it marches to its own drummer. Obviously, the Dow is not as diverse as the S&P, but once again, it's more closely aligned towards the movement of the S&P than it would be the Nasdaq. If you're looking at the Dow. We can take a look here. We're trying to make another run back up here. Not as strong as it was for the S&P, but that's here only on the daily. Let's move into the 2-hour chart. If you look at the 2-hour chart, you can see here this kind of balance level. But the key right now on the is going to be right here. But like I said, since primarily, I think about a couple of weeks ago, I actually traded all three in one day, Dow, SPOOs, and NAS. But I find it's just, unless I'm seeing something really unusual, and right now these markets are so, I call it odd or whatever, but the way it seems like the way they're trading. But you can see the significance right here with the Dow, and the level there is 26,344. So we made it up there, but we have not taken it out yet. But that'll be significant if we take this out on a 2-hour closing basis. You can see here, we have not taken it out on a closing basis. We're trying to press beyond that right now, but we have not taken it out. But my concentration really is just to stay with the SPOOs, at least for the way these markets are trading. And they seem too quick to just change around. We saw that yesterday as the real movement came out when we got those Texas numbers, and we really slammed them yesterday. And then they came back. I actually went long. I probably wish I would, well, not probably. I know I wish I would have stayed long. I picked them up at 30.68. That was where the 38% was. And then we dipped down to, I think, 30.64. and then we turned around and we rallied up, came back up. Well, when I got out, we came back up, but then we rallied and rallied and rallied, and the rest is history. I was just thinking, okay, this is a good place, but that would have been a good place just to cover if you were short, but it was a good place to get long, and boy, did they pick them up and move with it. But yeah, you can see the significance here. Just keep in mind this 26,344. You get a 2-hour close above that, and we've just closed this bar just now. So in approximately 2 hours from now, if we close above 26,344, then that's a buy mode. We're in a buy mode. And you can see right now the 30-minute, right now it's a buy mode. You can see right there. So certainly things that you don't want to necessarily, go and fade it. You do better by seeing this thing turn around and roll back and then going with that on a failed move. You can see here with the SPOOs, it's more significant because we've, you can see here, we closed right here at this 31.34. We actually just closed just above it. You see that on the 2 hour? So you have to, and we cleaned out, look at this, we cleaned out all these bars here, and now we've closed about 31.34. So that points to higher. So chances are, we don't know for sure, but I'm saying you're going to see that follow through with the Dow futures. But you want to go with the closing basis. That's what happened to me yesterday with the 30-minute that I referenced. Here I said, okay, if they close above it, then I'm just going to cover and get out. I'm not going to wait and just throw away money. And it was all the way up to the last minute. It was just barely above it. I think it's 31.25, and then finally it closed like at 31.23. I said, okay, well, I'll stick with it. And then we obviously did go and move lower. But just go with the technicals. That's the only way that's going to be able to save you. I mean, in the sense, these markets have just a tendency to run away. And that's only, to me, that's the only way you can just go in and manage the risk. But anyway, with that being said, let's go on and take a look at where we are on news. Not news, but economic data. Boy, did we get a bevy here. Look at this in the UK data. We got CPI. Holy smokes. We did get CPI and PPI. Those came pretty much, looks like pretty much aligned. And then we just got Italian industrial orders. And at the top of the hour, we do get HICP final data for Eurozone. And then as we come into the States, we'll have building permits and housing starts at 8:30 Eastern, along with some Canadian data, Canadian CPI. And that'll be it. So building permits and housing starts at 8:30 Eastern in the U.S. session, along with Canadian data, CPI, at 8:30 Eastern. And then that's it after that. I don't see anything else for the U.S. session. So geopolitics and virus concerns hurt Asian stocks and FX. South Korea won and Indian stock with losses in emerging Asian markets on Wednesday as resurgence of coronavirus cases in Beijing and border clashes between China and India unnerved investors. And you would have thought, I mean, at least initially we had, some pressure in the U.S. session yesterday, early in the morning, but sheesh, man, it just like it all went away, just like as if it's non-existent. And it's pretty nuts. And we've seen not only just from that, but just here in the States, as we've seen a resurgence in cases, and the market really took a real big bang on that Texas data. We saw a pretty good increase, and we turned around and just ignored all that. And we'll move on to this. This is just really true Asia stuff, and we'll move on to we have a couple other stories. So the dollar treads water on the Fed views in geopolitics. The dollar was little changed on Wednesday after U.S. retail sales rose more than expected in May, although caution kept investors from aggressively buying riskier currencies like the Australian dollar. Federal Reserve Chairman Jerome Powell doused some of the market's optimism on Tuesday with a rather bleak picture of the U.S. economy, while also reinforcing hopes for the continued policy support. Discouraging news over the past 24 hours: record high coronavirus infections in 6 U.S. states, clashes between Indian and Chinese troops in the Western Himalayas, and new coronavirus cases in Beijing also undermined sentiment. As against a basket of other currencies, the dollar edged lower to 96.89. The index has bottomed out after reaching the 3-month low last week, but the broad outlook remains pessimistic. Market players are looking to, with caution, how critical the impact of any second wave infections on the economy will be, said Katsushige Keita. It's not that the markets are pessimistic, but the length of time people hold their positions is getting shorter. Hey, I can attest to that. The Fed's Powell said that the full U.S. economic recovery will not occur until American people are sure the novel coronavirus epidemic has been brought under control. That remains far from certain, with infections rising to record highs in 6 U.S. states, including populous Texas and Florida. China also sharply ramped up restrictions on people leaving Beijing on Tuesday in an effort to stop the worst coronavirus flare-up. The Fed's cautious message also checked the momentum for the euro. I just got a drink of water. Fed's cautious message also checked the momentum in the euro, which held down below a 3-month high of 14.22. Reached last week. It was trading at 12.86 on Wednesday after rallying nearly 5% since a Franco-German proposal for a recovery fund in late May. This one is a little bit more, I don't know if we'll call it on point, but we'll touch on this one as opposed to the other one. Asian stocks turned cautious on virus surge. Asian markets turned a cautious turn on Wednesday on the resurgence of the cases and challenged market confidence. New infections have hit record high in U.S. states. A serious second wave of cases developed in the biggest risk facing equity markets, said Shane Oliver. However, provided any second wave is relatively mild in terms of pressure on health systems and the number of deaths is unlikely to reap havoc since the back of seen back in March. North Korea and South Korea offered to send special envoys to send troops back to the border. Let's see here. Not really any significance here. So with that, we'll just go and move into the analysis. Okay, here we go. Now let's get started with the euro. Well, as you can see here, Monday we had that sharp rally. Then on Tuesday we turned around and gave a big chunk of those gains. So we're just kind of stuck in the middle here. And you can see right here we're in a relatively tight range. It says the euro, after challenging a weekly level, now that was yesterday at 1356. We've talked about that level. Gave up a decent portion of Monday's gains. The pair slid to 1231 before rebounding. Resistance on Wednesday will be 1326 with support at 1210. And you can see right now we're trading in a very, very tight range. Look at this. So resistance on Wednesday will be 1326 rate, which really might even be a bit ambitious, but 1326 and support at 1210. Let's go move into cable. So cable challenge, cable challenge 27, and obviously this thing didn't finish all the way, but I meant to say the 27 level. You can see here, just about got there. Challenge 2700 before rolling back to close sub 2602, and you know the significance of this key weekly level. Look at that 2602. See how that after we just about made it up here to 2700. So cable challenged 2700 before rolling back to sub 2602 weekly level. The upside was limited ahead of the Bank of England on Thursday. We talked about that because we said, hey, look, it's going to be a little bit tough considering they're expected to do more, easing in light of this whole thing. So that's going to limit the gains, and sure enough, it did. But anyway, nonetheless, resistance on Wednesday will be, I don't know why this thing keeps coming up like that. Doggone it. It's supposed to be right there at that level, 2626. You can see here just above. You see this low here? That's what I'm going with. It's really frustrating. I don't know why this thing keeps saying, but it's supposed to be 1220, not even 1226. Holy smokes, 2626. So hold on. Because there's a 2602, and then what I'm doing is taking the low off of this. See this bar right here? There. And give it just a little bit of room above it. So 26, essentially 2626. And support's going to be 2430, which is much lower here, but also in case they do break them lower. So 2430. Go to the Aussie dollar. Same thing here. You can see where the Aussie pressed up here against the 69.75. I think that was resistance on, yeah, it was. It was resistance on yesterday, 69.75. We made that run up in there. So it says the Aussie posted a medium-legged doji after challenging resistance at 69.75. A pause to move lower appears in the cards, potentially to 66.80. So it's not going to be today's support down here, but I think that potentially we can come all the way down here to 66.80 before we find some support here. Down in here, you see that level, this, which is really 66.78, but I think that potentially we can get there. I think we're just running out of gas up in here at this point. But anyway, to 66.80. Resistance will be 69.30 with support at 67.62. That is in case it were to drip lower today. It doesn't appear they're going to, but that's going to be the support there in case things turn a little bit lower. So it certainly doesn't look like it at this point, but resistance will be 69.30. and support at 67.62. Now the Kiwi pushed higher on Tuesday, encountering resistance at 64.93. You can see right here. While in a tight range, momentum appears to be drawing up. The pair has the potential to slide to 63.36. Resistance remains 64.93. So 64.93 right here. We had actually had previously 65.10. Actually did make it up there. Look at that, right at the tip, 65.10. But it's going to be 64.93. And we said the potential to slide to 63.36, and we're sticking with that in case we were to slide back right now. So the dollar CAD held 35 even, or I should say defended 35 even. You can see here. Although our bias chart support was 34.92, it got as low as 35.01. But the pair held 35 even. The pair sorting its range after a dramatic move on Monday. Resistance will be 36.27 with support at 34.88. So 34.88. 36.27. Onto the dollar peso. So the dollar peso challenged support 21.85 on Tuesday and rebounded with a hammer. You can see that right here. A little bit of a mini hammer. Finishing above Monday's close, because you can see here's Monday's close here. We came back, tested the 21.85. We came back and closed above it, but you can see we're relatively quiet. Resistance will be 22.73 with support at 22.09. On to the dollar yen. Oh, and I put here no changes for the dollar yen. None. You can see here we're just dead in the water. Absolutely dead in the water. So no changes here for dollar yen. 674, 793. Just dead in the water. And that's even a stretch down here to 674. We're just not even moving. I'm just saying if we do get a break here, 674, but we'll keep that the same. Dollar index came back on Tuesday with a bullish cloud cover. You can see that here. Resistance is going to be 97.64 with support at 96.57. A little bit of a wide range here, but 97.64. and 96.57. And with that, let's go and move into the rates. So you can see here, just marking time here on the Kiwi yen. No changes really whatsoever. You can see that. So we had 69.93. We're going to keep that the same. And we'll stick with the 68.51 on the support. So these yen pairs are trading kind of quiet. Let's see how the euro yen's doing. Yep, look at that. Dead in the water. Euro yen. Doggone it. There we go. Now let's go to the euro yen. So you can see here, very, very tight day. We had all the way up to 22.32, but you can see how tight they're trading. We're going to go with this low, which confluences almost with these two, with this close. So that would be right there, 21.57. And support is going to be yesterday's low, which is 20.46. And on to the euro odd. Well, after challenge this level, we've kind of pared back a bit. Although, once again, like I said, I think the odds kind of run out of gas. Here, support's going to be right there, the low of that day, which is 62.40. Pretty close to what we had. And resistance is going to be this close right there, which is going to be 60.45. Very, very tight range. Look at this, how tight this thing's trading. Um, and we're going to go and try and get in some confluence here, so you can see the high here and really the low coming in here, there. And that's just a hair below the prior day's low, which is going to be 73.79. And onto the ASEAN. Same thing with this. And the day before, I mean, obviously it's Tuesday. Here, look at this. Just a very, very tight range. It looks like to me, once again, that these markets have kind of ran out of momentum, just tired out. And we're going to see where that pushes us. Right now, U.S. equity markets are still pushing, trying to push a little bit higher, but these markets are just pooped. Resistance is going to be this bar here. See the close and the close here, a additional close here. And that is right there. A hair below yesterday's high. It's going to be 74.98, which is what we had already. And support is going to be that level there, 72.98. And you can see after we press this area here for 36.29, we actually had a resistance at 36.43. You know, with Bank of England, we're going to go in and we're going to go and keep that 36.39 in place with support. Is going to be the low for this day right there, which is going to be 33.77. 33.77. Really, this is just getting ahead of the BLE. And lastly, let's wrap it up with Sterling Odd. Just things getting just quiet. I don't want to say we're not going down to 80.89, but what we'll do is we'll just go with the low here, right there, 81.21. Once again, just getting ahead of Bank of England, which we had 81.22, so we'll leave that. And then the upside, to close here, which coincided with yesterday's high also, right there. It's going to be 83.82. There we go. And there we have it for FX. We're still trading very quiet ranges here, even with the euro. Cable, look at this, just really dead in the water. And And you can see U.S. equities. They're pressing up here against these highs. Look at that. We're well above, for Mark, we're well above this 26.344 now. You can see here, we're still pressing up in here. It's an amazing run. I mean, like I said, this shit seems to be impervious to anything that may be negative. But there we have it. I'll get the bias chart posted. And thanks for joining us here on the European crossover webinar.